Let's have a quick though chat with Jonathan Davis. What is happening in the markets? Jonathan Davis told us before, and so did Jim Mellon, another top expert, and indeed Mike Ingram. We had lots of top financial experts saying, don't worry about these Brexit fears. The pound will always go up and down. Shares might take a bit of a tumble, but they'll recover. But today we see that Deutsche Bank are selling $1 billion in shipping debt, and their share price is down 70% over a year. So are we seeing the start of a European banking decline or even a banking collapse? Our Rosie's in Milan, as you know, she sent me a really disturbing story about the fact that most of the Italian banks are bankrupt. Anything to do with Brexit? There's only one man we can ask today, the top man. The man who does the Booms and Bus podcast here, the live show on a Monday, don't forget, 2 till 3, and then it's available 24/7 on podcast. It's Jonathan Davis, the Economist wealth manager, who joins us now. Hiya, Jonathan.
Hi, John. Look,
have
John,
you sold
Brexit.
us a pub? Are you the new Tony Blair?
God, no. Oh, God. How dare you? Can I just, before we talk about markets, can I just say about 2 years ago when Cameron wanted us to all went to the army to go into Syria.
Yeah.
I remember I was talking to Nick Ferrari on his show, and there was a general or a retired general on before me, and he said, well, we have to do it because, of course, Mr. Cameron would never lie to us. Ha! To which I said, well, hold on a minute. Remember 2003? Okay. The market.
Fair point. It's a fair point. What is happening in the market? Oh, first of all, let's talk what's happening with the pound. Should we be concerned?
It depends what you mean. The pound, as I've been saying to you and on my show regularly, is the pound has been falling, depending on your point of view, for 2 years, or 9 years, or 100 years. But let's say it's just the last 2 years. July 2014, the pound was $1.70 to the pound. It's now about $1.30. By the way, 9 years ago, it was $2.10.
Yeah.
In the 1950s, it was $4. The pound has been falling because the global economy is moving from expansion, 2009 to 2014-15, to contraction, 2014-15 to date, and for the next year or two. The pound does well in periods of expansion, and the pound falls in periods of contraction. So the pound is doing badly just now. Brexit is not material. It's an ongoing trend. The pound is doing badly. That, of course, will make the prices of our exporters cheaper, so it might give them opportunity to do more short-term selling. However, of course, it means that imports, and we do 5 times as much imports as we do exports, imports, of course, will be more expensive. So consumers will not benefit from the falling pound. And indeed, those same exporters, those same manufacturers, they also input into their manufacturing stuff which they import. So although it's a short-term benefit to exporters, it's actually a more big-picture detriment to the economy as a whole. So should we be concerned about a falling pound? Yes, we should be concerned about a falling pound, but it's nothing to do with Brexit. Similarly, property, you might have seen literally this week, half of the value of commercial property investment funds available to your listeners have closed their books this week. They have stopped trading.
Yeah, why is that? Is that because they're worried about people just pulling their money out? Is that what it is?
Yep. You cannot put money in and you cannot take money out. Has it started a week and a half ago? No. It's been going on for weeks, if not a few months. However, it certainly did get more and more people taking money out in the last week or so. So half of the big funds, we're talking about the people, the funds that your client, your listeners have got money with, property funds with Standard Life, with M&G, Prudential, Henderson.
But are you saying that's not connected to Brexit? Because they're saying it's connected to Brexit.
It's not entirely connected. It's immaterial. Brexit is yet another catalyst showing that the UK and the world economy is reversing, slowing down rapidly. It's definitely not the cause. I'll tell you what the causes are. What's happening in China is the cause. You mentioned your daughter in Italy. The EU banking, absolutely huge issue.
Well, Italy's a basket case, isn't it?
The EU banking is a basket case. You just mentioned Deutsche Bank. I mentioned to you Deutsche Bank months ago, and it was probably the first time you'd come across it. Deutsche Bank is the biggest bank in Europe, and its share price today is at the lows of 2008, at the peak of the banking collapse. And listen to this, Deutsche Bank is a multiple the size of Lehman's when Lehman's went under. And it's not just Deutsche, it's the Italian banks, it's Bank Paribas in France, it's Barclays, it's HSBC. I was just looking earlier today, the HSB share price has fallen 50% over the last 3 years.
And is this
nothing to do with Brexit?
And is this part of what you've been warning for months and months now, since you started doing your podcast with us, when we first started hearing from you? This is this collapse that you were predicting regardless of Brexit.
This is one symptom of the general collapse that's going on, and I liken it to, we are in a position very similar to spring of 2008. We had just seen, although it wasn't in the general media, we had just seen the collapse of the fifth largest bank in America, Bear Stearns. The central bank stepped in, created some stability. We then had the summer, then bang, Lehman's and the AIG, the world's largest insurance company, went bankrupt. And it seems to me all you have to do is look at global banking share prices. The markets know something is afoot.
Okay, so does that, let's bring it back to, hang on a minute, Jonathan, because we want to bring it back so people really understand this. So is it now a situation then, in our own domestic position, where we do need to sort out who's running the bloody country so we can get ourselves onto some kind of even keel to understand and cope with what might be happening globally?
If only. I'm sorry to disagree with you, but whoever runs the UK is not going to be able to do anything about this. This is a global issue. It's been rumbling for a few years. It's coming to a head as it happens, and I want you to get this. As it happens, I believe that there's going to be some general stability over the summer, because again, there will be machinations in the background. However, I would not be surprised, I'm not saying it's guaranteed, but I would not be surprised in the autumn we have something like a Lehman's moment. And the difference in 2016 to 2008-9, and this is what your listeners need to get, the policymakers cannot slash interest rates, which is what they have done every time there's been an economic problem in the last 40 years. They can't do it because we're already practically at zero. Thus, I'm telling your listeners, and if they haven't done it by now, then they've got no excuse, because I've said it often enough on your show as well as my show. They need to get their own financial house in order, because no one's going to bail them out like they will bail out the banks.
Good talking to you, Jonathan. Well, I say good. You depress the hell out of me. Good talking to you, Jonathan. Thank you very much indeed. Jonathan Davis, economist and wealth manager.